Proof interest rates aren't going up. I'm going to share with you the proof of this right here. This is so obvious. It's right in front of our very eyes. So first of all, let's take a look. Let me put Clay Travis on hold. Don't know why my husky voice, my sexy voice is coming back. Remember those 1-900 numbers? Hi, Josh. Would you like to go on a date? So the 10-year is at 1.49. The 30-year is at 2.1. Yeah. All right, so check this out. This boggles my mind. Principle to divest business of selling life insurance and annuities to U.S. consumers. Is discontinuing sales of all U.S. fixed annuities and life. Principle. That's crazy. All right, it became the latest household name life insurer to get out of the products of life insurance. It's discontinuing, and would let's see. It's considering it said initiatives where group principal falls on the heels of numerous rivals shedding life insurance and annuity business. They've been struggling with ultra low interest rates and sluggish sales environment for the large middle income market. Dozens of U.S. life insurance insurers have divested blocks of older policies and even operating units. MetLife spun off operations. AXA pursued an IPO of stock of its life insurance. Some insurance have divested through sales. In these instances, buyers typically have been private equity backed, laying off a lot of people. Those investment firms are employing different strategies in search of profits and adding more alt investments to the insurer's portfolio mix. The fixed annuities that Principal aims to divest are somewhat akin to bank certificates deposits, and that investors hang over a lump sum in exchange for a promise of interest rates and fixed rate payment. Life insurance earn much of their profit by investing customers' premiums in bonds until claims come due. While the U.S. interest rates are up from the depths of 2020, more insurers have thrown in the towel of offerings of highly dependent on interest income. The decline in interest rates and the likelihood of low for long, forever scenario is driving the deal activity. 100%. So my man Gary Metler, who I showed you from on LinkedIn, Gary Metler. Let me find him 1 second. Before I do, let me just U.S. insurer AXA Equitable leaves AXA name behind. The 161-year-old brand starts fresh with old name. All right, 1 second. Here's Gary, the annuity maestro. He's the one who had informed me of Principal not laying people off yet, but certainly being bought out. He just terrible news right here. Let's see what it says. Terrible. I'm stunned by this. Principal cease offering fixed annuity retirement products. Gary says terrible news. So what happens to their field force? Yeah, exactly. Take a guess. So anyway, the issue is that if you thought interest rates are going up, you would not get out of the life insurance / annuity business because the way these guys make money is they invest your money. You turn over a lump sum. They invest it in higher rating insurance or higher rating corporate bonds, highly rated corporate bonds, the government bonds, where they can get higher rates from what they're paying you. It's just that simple. And now they can't do that. They certainly aren't thinking rates are going to jump up anytime soon, or else why would they do that now? It doesn't make sense. Especially when we just saw right there too. I think I just saw, hold on a second. Like they don't have the cash, they announced a new 1.2 billion share repurchase authorization. Wonder why they're doing that. Why are they doing that? Buying back their shares. You know why? Because they're going to sell it to a freaking private equity who's going to freaking slice off 50% of the employees. See that a mile away. This is... let's just take a look at the price of what the share price is doing here. Principal Financial, it's up. PE ratio of 10, yield 3.86. there's a reason they're buying back their shares, man. I'm not saying to buy this stock. I'm not saying at all. Don't get me wrong, but you can see what's happening a mile away. So they're at 48 on the beginning of the year. Now they're at 65, 63. Let's go down here. They were at 52, 53. Now they're at 64 over the 3 years. Yeah, man. I mean, that's you can see where this is going a mile away. So you do you. I just they're buying back $1 billion worth of shares. The market cap is 17 billion. So they're going to take $1 billion of that off the table. Crazy. Interest rates aren't going up, man. They're not. And so, I mean, take it as you will. But if you're like, I can't have bonds because interest rates are going up, yeah, tell that to principal. All right, we'll see you.